Now, some of you might be thinking, what does this got to do with anything? Just listen. If you had that skill set and you sat down with a lay audience of card players, and maybe they've been playing for a long time, but they just never seen sleight of hand before. They've never seen a mechanic's grip. They've never seen dealing seconds, bottoms, never seen anything like that. And a mechanic that's proficient in doing that and running up a deck. I'm going to show you, okay? I'm going to give you a visual representation of what I mean by this. I'm going to take a brand new deck of cards. I'm going to peel the plastic off of it. I'm going to show it to you. It's all real, not some gimmicked cards. And I'm going to run up a hand with shuffling right in front of you. And I'm going to deal it out. It's going to look just like everything's on the up and up. Everything's fair. You watch the cards go interwove one another. It's shuffled, legitimately shuffled. But I will know every card in its proper order from top down. For those of you who are familiar, look up or Google how to riffle stack a Cy Stebbins order from a new deck. That'll be homework for y'all. It's kind of hard to find, but that's what it is. That's the procedure. That's what a magician does with a brand new deck. Just because you hand the cards to someone else at the card table and you watch them shuffle, that is not fair. Because I know how to run up a hand. I know how to cop cards. I know how to switch cards all while we're playing. And if I was less of a person, I could make a lot of money doing that. Lots of money doing that. I know how to count cards as well. Irrelevant, I know. It's not pride. I'm just telling you, these are the things I pursued when I was a little kid into teenage years. Those are the things I wanted to be good at it. To me, I think performing magic was amazing. And I know for some of you watching me do these things, it feels like a magic trick. There's got to be some kind of gimmick that I'm doing, but now I'm doing it live. And I'm calling it and explaining it to you beforehand why it should do certain things at these specific levels. On these very candles, watch this candle, it's going to act as support, act as resistance. I'm taking you behind the scenes and showing you what sleight, what gimmick the algorithm is going to be using at that moment. Now back to the analogy and the relationships I'm trying to draw here. Because it's my position, it's not necessarily important for you to believe it, but I feel, because I'm obsessively compulsive about things, I feel I have to at least make the argument as much as I can, and this will be the last time we'll talk about it. Admittedly, that probably sounds like it's not going to be true, but it will be the last time I'm going to talk like this. We all watch price deliver through our trading platforms, our broker feeds, CNBC, the ticker tape, everything, all that price fluctuation. Think of that as cards, individual cards. Every time there's a new tick, every new market price printing, that's a new card in a deck. How many cards are there? Well, let's just say, for the sake of a whole 24-hour day, there's 52 cards. Now, every one of those transactions obviously would amount way beyond 52, right? But we're just going to draw a very vague analogy, but it'll make sense in the end. I have folks that have been floor traders from the CBOT and the CME. I have had people that came from hedge funds. I have had folks that claim to be bank traders. Okay. I've had folks that literally would be the bee's knees on Twitter, but they're not market makers. As much as that title is associated with them, they may be called a market maker. I made the market for oil. I made the market for copper. I made the market for options on this stock. You dealt in price. You didn't make price. You're dealing in the price feed that's coming. Okay. You're not establishing and ordering where price is going. Ultimately, you have no say so in that. You might find and provide liquidity, that's fine. That's not making a market. I mean, that's the point I'm trying to make. And now all of you, because you're all indoctrinated, you're used to seeing all this misinformation. You only know as much as the books and the people that train you when you go to work at these financial institutions know. That's it. That's all you know. But when those types of individuals come into this fold and they see what I'm doing, how I'm calling it, what I'm using, and the logic behind it, frankly, they're like, what the fuck is going on here? And it rattles them. And the first thing that they reach for is, okay, I got to immediately challenge this guy because this is completely upsetting my entire understanding. I got to question my entire reality. What I've been doing for work for this company, what I've been doing as an employee of this firm, what I've been doing for this brokerage firm, what I've been doing for this bank. Now I feel like I got to question my own reality because this shouldn't be possible. Is there really an algorithm or is this guy full of shit? Yes, it's always the same way. And some are very belligerent and say, like, oh, dude, you're full of shit. Okay. I'm still going to do what I'm doing. And you don't know what I'm doing, but I'm going to keep doing it. And the others very politely will say, I appreciate what you're trying to do. And I appreciate what you're saying. And maybe you found some patterns, but your logic is the why price is what it's doing is wrong. I don't believe I am. I don't believe I am. In fact, I know I'm not. So if we were to go back to the analogy for cards, okay? We're all watching price. It's just meandering around, going around, banging around between specific levels, and it looks all random. And these professionals and retail traders alike will look at the charts and attribute a bias, a sentiment, an opinion, if you will, and attribute a measure of monetary risk associated to a pattern or the output of an indicator, which only does one thing. It number crunches what the price is already done. Not that it's guaranteed to do something as a result after that. It's looking at something, crunching the numbers, chewing it up, and spitting it out, and you're trying to read it. Much like individuals that take chicken bones and they shake them in their hand, throw them down, and they try to tell the future from that or read palms. It's all bullshit. That's nonsense. The market has no affinity for algorithmic animal patterns. It has no affinity for Elliott wave. It doesn't even know what Elliott wave is. It's not keeping count of the waves. Okay. It's not doing all that shit. It has nothing to do with Wyckoff. Nothing. Supply and demand is an illusion. In commodities, it's a real factor. That's a real market. It's real. It's the world's grocery store. There's a real supply and demand for corn. There's a real supply and demand for wheat, for gold. But there really is no supply and demand for S&P. So it has to be what? Engineered. And it's all manipulation. It's gyrating and moving around just like the currencies, which has no real supply and demand factor associated either. So when you put down your alma mater for a few moments and just take a step back and think about it, we're all watching price go through the ticker tape all day long. That's equivalent to the cards shuffling at a table we're all sitting at trying to play our hand. But amongst all of us, there's a mechanic. That hand that you don't see that's running the cards the way they want those cards ran. They're calling the pace. They're calling the shots. They know how to make your hand look good enough for you to play it, and you'll plunk your money down, and then they're going to run you. They'll ante up. You'll ante up because you feel like you got a strong hand. You got kings and aces. That's a great hand. Well, it's really not that great a hand when you have a royal flush and spades. Kind of defeats the whole purpose of feeling like you're invincible when you have someone that's on the other side of the table who ran the cards, dealt them out to everybody, And I'm going to show you what that looks like. I'm going to videotape myself doing it. You can see it happening. And no, I'm not going to be doing weekend tricks on YouTube channel, but I just want to give you a visual representation because it feels while you're there like everything's on the up and up. It's normal. It's just trustworthy. It's a brand new deck. You could bring the deck to me sealed up, and I'll still do it. You need two perfect Pharaoh shuffles, a football team's name and a basketball team's name. And anybody that figures out how to run a size Stebbins order in a deck of cards, a new deck order, you'll know exactly what I mean, what I just said there. That's how you do it. But a new deck ran up like that becomes size Stebbins. It means all I need to know is the bottom card and the top card. What does that mean? I need to know where is the buy side and the sell side. Then I just know the rest of the order. I know the PD array matrix at that moment. I know what is likely to be used in price, but the price may print something. It may not give me a breaker. It may just give me a fair value gap. It may just give me an order block. It may just give me a propulsion candle. But there's so many things, ICT. How do you know? Because it's only going to present one or two things. That's it. That's the benefit of learning everything I'm teaching you. Because if you're going to be a one-trick pony, you can make money. Yes, you can just do breakers. Yes, you can do the model I taught last year on YouTube. They work. It works. I'm not limited to that. Neither should you be. Once you learn how to do last year's model, which is this year's model, that model is wonderful. But hopefully it'll provide you the calmness not to rush to learn to do everything right away. Just let it happen. I didn't learn all this stuff in 1 week. I didn't learn it in 1 year. It took a lot of time. And you're going to find that you're going to wrestle with yourself. And some of you probably go into this and you probably watched some of my videos in the past and said, I'm going to master the breaker. I'm going to master the fair value gap now. I'm going to master institutional order flow entry drill. And you're finding difficulty with it. And you're second guessing yourself. Well, maybe it doesn't work as well as I thought it did. No, you're just trying to push too fast, too hard. And maybe that PD array is probably not your forte. Maybe there's another one that's easier. Visually, I think that breakers and fair value gaps are the easiest one to see. But when we're watching price, and it's moving around, gyrating around, that's equivalent to every trader sitting at the table watching the deck get shuffled. Looks fair, right? Everybody's watching the same price. We're all watching ICT talk about the real-time data in ES. Those candles are moving around. The market's being shuffled. And then finally, I'm counting cards. Not candles. I'm not counting candles. I'm counting cards. And I'm going to see when that hand is perfect for me to bet against because I'm running the deck up. Who's running price? I'm running price. I'm waiting for a specific thing to occur. And then I'll ante up. I'll pyramid, add more to the pot, add more to the pot. Letting retail traders feel like they got a chance. I annotate it in my charts. Retail's wanting to sell short. Retail has their stops here. I'm anteing up. I'm wanting that wrestling match between retail logic traders and their harmonic patterns to wrestle me, which is the market. And the market wins. The hyenas laugh for a moment. They get a little nip. But eventually the lion stands up and tears their ass up. And you have 41.93 delivered. You have 41.80 delivered. 41.76 and a quarter delivered. All under the basis of accumulation in the SMT divergence between the NASDAQ lows and the ES lows. That was the stage. I was setting you up for the idea that this is all under accumulation. It's sloppy in price delivery. Yes. Yes. That was the whole point. It's ugly. You have to know what it looks like. Wrestle through that while you're learning. And then if you're wise, you'll say, I'm not going to trade today. Wait a minute, ICT. If you wouldn't have traded today, you couldn't have called those moves. You're right. And guess what? I don't give a shit. Because these types of moves happen all the time. That's the problem. When you are not versed in what's actually going on and how often this repeats, I mean, I've spent every day with you. Am I deleting tweets? Am I calling things that are outside the delivery of your own chart? How many times do I have to say and show and prove before I can really get you to understand that this is not random? It's not random. I just can't speak as freely as I want to. I want to say all kinds of things, but I can't. So I have to talk like this, which many times frustrates some of you. And you get angry, like I'm doing it to be funny or I'm toying with you. I'm not. I wish I could just talk openly. I can't, though. I have to stay within the language I've created. That's the only thing that keeps me safe. 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 So when you think, but I worked at this firm, we were told that this is what happens. And we see the order flow coming in. You're watching cards being shuffled. You're sitting at the table. You're just right next to the dealer shuffling the cards. And you're going to call yourself the market maker. You're neither. You're not a dealer. You're not a market maker. You're a participant. You're a player at the card table. Price is coming and going whether you deal in it, trade in it, or not. It's equivalent to when you miss a move. You may have seen, oh, 4180 is going to happen. 4193, I saw that coming, ICT. Before you even mentioned it early this morning, I knew it was coming. That's great. It's wonderful. If you don't take a trade on it, what's it feel like afterwards? Well, I mean, I saw it coming, but you didn't do anything with it. That price was going there regardless. It was going there regardless of whether ICT mentioned it or not. If ICT would have slept in today, and admittedly, I wish it would have, I'm tired, it would have delivered that. I explained to you where it was going to go, why it will go there, because that's where the orders were. Buy side was resting above that 4192 relative to the daily chart. Why should it have gone there? Because that's where large funds are. That's where the liquidity is. The algorithm is coded to go to those intermediate term highs like that on a daily chart. In that way, it allows the market to absorb and utilize that liquidity that will be invariably resting above that. It has nothing to do with buying and selling pressure. It has nothing to do with it. Zero, zilch, nada. It is not a factor. You ever play, my son, my youngest son, he had this game on his phone. Admittedly, I was addicted to playing it once he showed it to me. I just don't remember what the hell the name of it was. It was like this little worm thing or snake or something like that. And it would you steer it around and you eat all these dots, but you can't touch another snake or you can't touch the edge of the area you're playing in, or you have to start all over. And the more dots you eat, the longer your snake becomes.